Let me say something that might make some people feel uncomfortable. Most dentists are excellent earners, but their investment portfolios look nothing like the portfolios of the wealthy. And it's not because dentists aren't smart. Yes, most dentists are very, very smart people. And it's not because they don't work hard. Again, dentists are some of the hardest working people on the planet. But it's because they've been boxed into a system that's been predetermined and was never designed to build real wealth. Now, let me explain. If we haven't met yet, I'm Dr. Jonny Walker, aka Jonathan with Anachi. I'm a part-time endodontist and real estate fund manager, and I help successful business owners invest outside of traditional Wall Street products so that they can buy back their time. Now, here's the core issue. Dentists are overexposed to public markets and underexposed to private opportunity. Not by choice, again, but by default. And most dentist portfolios look like this. 401k plan, maybe a SEP IRA or Roth IRA, profit sharing, maybe a brokerage account with mostly ETFs, mutual funds, and stocks, and a little cash on the side. But ladies and gentlemen, that is not diversification. You may think it is, but it is hyperconcentration inside one ecosystem. And I want to be very clear, this isn't a criticism. Because after all, dentists they're very busy. They're clinically focused on their patients, which is what they should be. They're high income earners, but at the same time, time constrained. And they're constantly marketed to by the Wall Street matrix. The Wall Street matrix system pushes you toward employer plans. They want you to set it and forget it style investing. They champion liquidity over strategy, simplicity over control, and it feels responsible. It feels right. All the men and women that are proponents of this, they seem like they're honest. But here's the problem. When you look at how the ultra wealthy invest, the contrast is stark. They're not allocating primarily to ETFs, index funds, and public equities. Instead, they're allocating heavily into private equity, real estate, private credit, alternatives, cash flowing businesses, etc. And you might ask yourself why? Because that's where control, that's where tax efficiency, and that's where asymmetric returns live. And very importantly, it is also where cash flow lives. This is the key point that most people miss. The difference isn't intelligence. It's not risk tolerance. It's not discipline, but it's access. Most dentists, they don't ever see private deals or private investments. Your financial advisor will never show you this stuff. These dentists, they don't have deal flow. And even if they were to have a deal come across their desk, they don't have a way to evaluate the opportunity and do due diligence on it. They may not have a trusted network with specific knowledge and skill set in this type of investment that helps them to evaluate risk. So what do? Well, the confused mind says no, and they default to what's available, to what all the gurus are saying. And over a 20 to 30 year career, that gap compounds massively. Here's the hidden cost of a public-only portfolio. Number one, you are fully exposed to market volatility. Number two, you're paying taxes on growth that you can't control. Number three, you're accepting returns the market gives you. Number four, probably most important, is you are completely extricating yourself and outsourcing the decision making. Meanwhile, the wealthiest investors are asking different questions. One, hey, this is private offering. Who's operating this deal? What is their experience? Do they have relevant experience? Where does the cash flow come from? Understanding how the cash flow works. How is risk mitigated in this investment, right? What are they doing to mitigate risk at the deal level, at the operator level, at the debt level, at the business plan level? Another important question is, how am I going to be taxed, right? Because with equities, you don't have any choices. You pull money out, you pay the taxes, capital gains taxes. With private investments, alternatives, and real estate, there are different options and tax loopholes that the government provides, and it's just up to you to take advantage of it. Now, this is a completely different game. Now, some people will say, hey, you're talking about the stock market being risky. Private investments are risky too. No argument here. Yes, absolutely. Private investments also incur significant risk, but bad private investments are much riskier. And so are bad stocks. And so are overpriced index funds. And so is blindly following a system that you don't really understand. Risk doesn't just disappear in public markets. It just becomes invisible. Here's the hard truth. You don't need to abandon public markets entirely. I'm not saying to do that. Some people like the stock market, and yes, you should have exposure to the stock market if that fits your investor criteria. But you don't need to become an operator, and you definitely don't need to swing for the fences. But if 100% of your capital lives inside the Wall Street casino, you are playing a very different game than the people you admire financially, right? Really rich people don't have 401k plans. And that gap doesn't close with more income. In fact, you pay more taxes and you're making less as you go along. So it closes with access and intentional allocation. Now, this is exactly why I built the Walk of Wealth community. It's not as an education course. It's not as a stock picking group, but it is a curated room for dentists and business owners who want exposure to private investments, who want better due diligence, who want smarter allocation decisions, who want to network and connect with other high-level entrepreneurs and dentists. You also get access to conversations that you don't get in a 401k meeting. You have real conversations with other individuals also trying to achieve wealth in the same way that you are. Now, what this does is it greatly decreases the timeline for you to start making meaningful investments and building wealth and cash flow. It also decreases the chances of you getting into a bad investment. There's no pressure. There's no hype. If you want to learn more about our mastermind group, I'll put a link below for a video that describes our mastermind group. This group is not for everybody. I'm going to put that out there right now. It is for very certain specific individuals. If you are one of those people, after you watch the video and you feel that way, I encourage you and invite you to please apply to join our group. We would love to have you. All right, guys, so that's all I have for today's video. If this video resonated with you, please make sure you smash the like button. Make sure you're subscribed, because understanding how money actually works is the final step to getting your time back.